Hi, this is Sive Morten with the daily update on EuroFX. I post my exclusive market overviews with the key political and economical events, charts and important levels on the ForexPeaceArmy.com forums weekly. This short video is a response to rapidly changing situation on the currency markets and should help you to stay on top of the game and be profitable. I suggest you to visit ForexPeaceArmy.com forum and read my analysis for the week before watching this daily video.
Welcome everybody, guys. Today again we will take a look at the euro currency. Recent couple of weeks euro currency shows week by week brighter and brighter bearish behavior. So if the couple of weeks ago, maybe 3 weeks ago, we still talk about contradictive patterns, that some patterns should fail, and when they will fail we understand what the direction the market will choose and so on. So as soon as market started to drop below the bottom of the right shoulder on the hand shoulder pattern on the daily chart right here, our confidence in the possible bearish development starting to grow. And in the last week and in the week before, we see a really significant drop on the euro currency that confirms our expectation and supports overall bearish sentiment on the euro currency. So currently the major news stands mostly around sentiment and around the recent European Central Bank comments. So, in shortly speaking, the Draghi comments keeps the open for more stimulus, and actually, if even European Central Bank will not turn to some more aggressive policy, it could support quantitative easing in some way for a longer period. Maybe they will contract a bit the amount of the bond purchasing on the open market or something of that sort. But in one way or in another, the quantitative easing program really has a lot of chance to be continued beyond the March of 2017. And the market mostly treats these comments as bearish for euro currencies, moderately dovish, and that has led to some short-term collapse that we see in the recent couple of sessions last week. If we will combine this statement with the expectation of the rate hike on the Federal Reserve, so this is double pressure on the euro currency, and this push market lower, especially from the perspective of the more tightening from the Fed in 2017. So they already have said that they will probably increase rate once or even twice in 2017. So that leads market to a reassessment of the current value of the euro currency, and push overall rates of the euro currency down. Recent CFTC report that shows the amount of the speculators' short position significantly have increased, and this increase was accompanied by the increasing in open interest. It means that the net short position have increased not just because of the closing of the longs, but also by the putting the new money on the sell side. So traders have opened new short positions. That confirms existing of the moderate bearish sentiment on the market that in general brings more confidence with the downward continuation. Since all short-term destination points, all objective points on the daily chart have been completed. So recall what we have talked about. So first this was 109.30. Here market has completed it after the European Central Bank statement. That was the ABC top target. And second target was 109. So we said that if euro has failed at the bottom of the shoulder, it should fail at the bottom of the head. That's really has happened. So you can see market has dropped below this bottom, and take a look, it hasn't returned right back up. So it means that this is not just some kind of the wash and rinse. This is probably a real downward continuation here. So on the daily chart here, we do not have any extensions, any more targets. That's why the only target that we have right now is mostly stands on the weekly chart. And on the weekly chart we have extension that points on the 106 area. It's the next destination point. So it's 200 pips lower. So maybe we could use something, I don't know, minor ABCD here. But guys, our major pattern right now stands as follows: A, B, C top. 100% extension already has been hit from this pattern, and market stands on the way down. As you can see on the daily chart, market is not ever sold, and the weekly chart it also not ever sold. Market has dropped below all monthly pivot lines, even pivot support 1, pivot support 2, and so on. And also market has broken the major 618 fib level on the weekly chart. So in fact, below the market, we do not have any really significant fib levels, no pivots, nothing. So your currency right now stands also below the yearly pivot point. That's why in the current circumstances, it's not really logical to expect some deep retracement. It's probably market already has confirmed. Take a look that recent retracement stands really small. They're not really very significant, and even we could say that they are almost invisible on the daily chart. So one-day retracement is very difficult to catch on the daily chart. It means that we mostly should watch for upward rallies on the intraday charts. So taking into consideration the most recent retracements, it seems that your currency could retest this broken area. So take a look. This is 110 approximately areas. Also weekly pivot point, weekly pivot resistance one. So some kind of this combination, maybe it's a bit wide, 30 pips, but maybe it's confidence resistance 109.70, 110 area. So something of that sort probably should be the target of the possible upward bounce here. Maybe market will show a double retracement here of this minor swing. But anyway, this will let market to stand below the weekly pivot resistance one and will just retest this area of former support. As you can see, bottoms here was the Brexit candle bottom. So market could retest it and then continue move lower. That will be our tactical task for a coming week. Get the suitable rally that we probably will try to use for taking the short position. That's major idea. On the intraday charts, guys, currently we do not see any patterns actually. So we do not see what we have. Free drive pattern has worked nice. So you can see its top has been taken out of between the second and third drives. Right at the Mario Draghi comments when the market collapsed. No pattern, no other patterns we see here. All that we could just point that, take a look. Relatively equal retracements. This market is forming on the way down. So when the market stands under pressure, it usually shows very small retracements. And take a look what the action to the downside. Very equal candles. Open almost every time on the top, closing the bottom. It's real pressure. So take a look how they will. A lot of black candles in a row. So that is just, as you can see, very important moment. That's why if market will show this retracement here, it shows approximately 109.50 area, right to this previous consolidation around our previous supports, 109.60. But as I said, even market will show retracement up to these areas will be not the strategy as normal. So we know that weekly pivot resistance one should hold the retracement on the bearish trend. That's why actually market has the limit to show the deeper retracement right to the 110 area. That will be our important level to watch for. To keep pure bearish sentiment and bearish market, price should not move above this area. This will be not very good sign. So approximately something of that sort. So in next week, we mostly will be watching for upward bounce. That's our tactical task for taking the short position in downward continuation.